new week, a new record. Gold now trading at $2,651. I need a bell I can ring to bring in the new record each week. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. Welcome to the show. A huge amount of stories here to get through. In the news section, you're just going to see Russia and China everywhere. But it's not going to be the stories that you're normally reading. It's going to be the resource side of things. You're going to see supply chains. It's kind of like the infrastructure of the politics. I remember when I really became interested in economics was after the financial crisis of 2008. I realized the importance of economics and really that politics is the window dressing of economics, that really how things work is really largely based, I would argue, on the economics, and the politics is really, I wouldn't call it a sideshow, but put it this way, to use an example for the sake of illustration, if nobody has any food and they're all out on the street protesting, your politics will be based on that reality, on the economic reality. So it's so interesting now when you look at the supply chain and China and Russia and the US all having a go at it. And why? I mean, what is the underlying infrastructure of the economy? It is natural resources. So it's quite interesting. In a sense, we all already know this, but I would argue it's only in the last 4 or 5 years, even maybe since COVID, let's call it, which amazingly is going on 4 years. I would say it's only in the last 4 years that natural resources have really become front and center in terms of the news narrative. Of course, in, pre-2008, there was the commodities bull market, but there wasn't the same kind of geopolitical, dare I say, existential struggle that was implied in the news. Whereas today, there is a much more edgy undercurrent post-Ukraine war, and with everything we're going to see. So we have a wonderful show for you here today. Henry Lazenby, Western editor at the Northern Miner, is going to join us, and he's going to discuss the Denver Gold Forum, as well as the Beaver Creek Summit, and he's going to share all his reflections. It's a extended 30-minute interview on these conferences, and just to, give you a sense of what was being discussed, I would say surprisingly, the importance of management is a reoccurring theme in that conversation that we had, not necessarily what you might expect, right? We also discuss where ESG is today, of course, dominating conferences from 2016 to 2022. I asked Henry, where are we with ESG in September of 2024? And so a fascinating discussion there. So let's look at the headlines here. Around the world, gold price breaks $2,600 barrier as Fed cut bets prolong historic run. This is Reuters via mining.com. So gold, again, getting a lot of attention here with its record run. Again, $2,653.70 on the screen in front of me on CNBC. And another headline, buy bonds and gold as bubble risk returns, B of A strategist says. This is Bloomberg News via mining.com. So perhaps with stock markets at records as well, and all of the geopolitical uncertainty, as well as the U.S. election, fears of a recession, now gold looking perhaps like not a bad place to preserve your gains, should you have made some. And one more headline on gold. This is Bloomberg News via mining.com. Gold miners say they're now disciplined as deal-making heats up. And there was a story in the Financial Times about maybe 3 weeks ago, and I touched on it briefly in the introduction here, where Mark Bristow and the Rio Tinto CEO, Jacob Stolzholm, mentioned how they were in no rush to overspend on acquisitions, as we saw, 13 years ago in 2011. I also discussed that with Henry, and Henry had a lot to say about that as well. So just a couple of excerpts from this story. At an industry gathering in Colorado Springs this week, executives sought to show discipline by talking up the virtues of cutting debt, controlling costs, and rewarding investors rather than the prospect of more M&A. And here's Ross Beatty, chairman of Equinox Gold, who said in an interview at the Denver Gold Forum, quote, "There were some really stupid deals last time around. Companies bought dumb stuff and were penalized for it," end quote. And another quote further down in the article from CEO Clive Johnson, who is CEO of B2 Gold, who said at the forum that the company, quote, "is returning as much as we can to shareholders by increasing cash flow and paying out a decent dividend," end quote. And even Mark Bristow at Barrick Gold called Goldfield's deal for Osisko, which represented an almost 67% premium to the share price the day before it was announced, as, quote, "concerning," end quote. Bristow continued, "These are markers of exuberance in the market," end quote, adding that he won't pay any premiums for acquisitions. So a lot of skepticism towards M&A. We still have seen a remarkable amount, I would say, in the last year. Another couple of headlines. Copper price sees strong week with boost from Fed and China demand. And copper is trading at $4.45. So bouncing really off of $4. It briefly went below $4 and then bounced right up and now up 10% at $4.45 since hitting, $3.95 or $3.99. So nice bounce in copper. But also, iron ore price hits one-year low on soft China demand prospects and firmer supply. So, of course, China also being a major story here. Remember all of the discussion around the Chinese property sector. Another looming concern on what is increasingly feeling like a wall of worry, interestingly. And, of course, bull markets love to climb a wall of worry. So it just seems like we have just enough storm clouds here. So interesting moves there in the metals. And we will look more in detail in the metals section where we go through all the prices. Now, interesting note from the publisher of the Northern Miner regarding the Victoria Gold story. And there has been pushback from people in the industry. And the headline on the Northern Miner is the Northern Miner's commitment to independent reporting. This is by Anthony Vaccaro, president of the Northern Miner Group. And here is the note from the publisher. For over a century, the Northern Miner has stood as a pillar of journalism within the mining and metals industry. We recognize the vital role that mining plays in the progress of civilization, and we believe in its importance. However, mining's future, and indeed its integrity, depend on transparent, fact-based reporting, even when the truth includes mine failures. Our recent comprehensive coverage of the Victoria Gold Mine failure sparked a negative reaction from a few in our industry. And while I appreciate the time that some took to express their opinion, I found a common thread in this critique troubling. The basis for the criticism was our inclusion of quotes from people who work at the mine itself. Not from NGOs nor anti-mining activists, but from those on the ground. It was my hope that such feedback would serve as a reminder that the mining industry extends far beyond the boardroom. The workers on site, the very individuals whose livelihoods are at stake in moments like these, are, after all, the lifeblood of the industry. Vaccaro continues, as the president of the Northern Miner, it is my responsibility to ensure that the relevant and reasonable voices that make up this great industry are heard. I will not waver in that commitment. I am proud of our editors and reporters for seeking out these voices. In this particular case, the rare decision was made to use unnamed sources. We believed that the fear of those sources, in most cases workers at the mine, expressed that speaking on the record would jeopardize their future employment, was very real. We tested the claims of our sources and ensured that they were backed up by another source or by some form of documentation. One quote we used didn't comply with our standards because it was from a third party we didn't interview, so we retracted it with an explanation. We also edited some early stories to paraphrase some quotes, recognizing that more conservative use of quotes was warranted. However, we believe our reporting was fair and factual, and to this date, I have not been presented with any evidence to the contrary. I believe in this industry, and I want to see it reach its full potential. In a sector where many other publications self-censor or allow companies to kill unfavorable stories, I believe that strong journalism makes the industry stronger. True accountability, the kind that comes from top-level reporting, builds resilience. When we care about something, we don't cover up its flaws. Just as good parenting requires discipline alongside praise, a thriving industry requires honest critique alongside celebration. Anthony Vaccaro, president of the Northern Miner Group. And I was quite proud to be a part of the organization. When I read this, I couldn't agree more. In a sense, one of the big criticisms of trade publications, whether it's dentistry, mining, you name it, is that they are often seen as cheerleaders for the industry. And the Northern Miner, from my own perspective here, it does recognize the importance of mining. It does, in a sense, celebrate the important role that mining and the mining industry have played in the business world and, frankly, in the progress of civilization, as was pointed out in this letter. So I think it's refreshing. And again, it just makes me proud to be a part of this organization. The dedication to a free press at the end of the day is a wonderful thing. And it comes with the territory. If you're going to go out there and try and run a free press, you are going to get pushback. So it hasn't been easy, I don't think, for almost anybody who was involved in the Victoria Gold situation. It hasn't been easy for the company. The board resigned. The CEO was let go by PricewaterhouseCoopers, the receiver. It wasn't easy for the First Nation of Notcho-Nyack-Dun, who is still dealing with the environmental fallout of this situation. And frankly, it hasn't been easy for the government. I was quite critical of the government at the beginning, but to their credit, they pivoted and they started really taking action. So it hasn't been easy for anybody. As I've kind of long said here, nobody wants a mine disaster to happen. And so all we can do is try and get it as accurately as possible. So it continues with the fallout from this mine disaster in Yukon. Here we are almost at the end of September. Continuing on, fascinating story from the New York Times, tweeted out by Mark Nelson on Twitter @EnergyBants. Blockbuster Microsoft data center deal resurrecting 3 Mile Island nuclear plant. And posting this story by the New York Times, 3 Mile Island plant to reopen as demand for nuclear power grows. The infamous plant, closed since 2019, is getting a new lease on life after Microsoft agreed to buy its electricity to supply a growing fleet of data centers. So quite a story here. And it just goes to show how nuclear power, if you're trying to be environmental, as I imagine Microsoft is, yet you still need huge amounts of power. I mean, there are only so many options out there. So you see 3 Mile Island reopening. I mean, that is quite a development. Again, reported by the New York Times and tweeted out by Mark Nelson. And Mark Nelson tweeted later, however big you think this Microsoft nuclear deal is, I'm telling you, it's bigger. One of the biggest power deals ever. $800 million a year for 20 years. $16 billion for one nuclear reactor. From a 40-year-old reactor just to get to age 60. Now we have a market for new builds. So fascinating developments there in nuclear power. Now, touching on another subject, which will relate to the discussion I had with Henry Lazenby later in the show, from the Financial Times. It's an opinion piece, ESG is dead, long live ESG. And the subheadline, we must urgently address the tension between profitability and sustainability. And this writer is interim CEO of the University of Cambridge Institute for Sustainability Leadership, Lindsay Hooper. We don't have time to go through the entire piece, but I thought we could zero in on the argument here. It is time to confront the uncomfortable truth. ESG as it stands, grounded in disclosures and voluntary market action, will not deliver the necessary change. The solution is a radical shift towards, quote, competitive sustainability, end quote, a concept I have recently set out in a paper co-authored with environmentalist and sustainability advisor Paul Gilding. The core issue is not intention, but execution. ESG has been largely an extra layer on top of traditional business models to manage risks and enhance reputations. But this fails to address the fundamental tension between profitability and sustainability. As long as the market rewards short-term gains over long-term resilience, businesses will harm the planet and markets will destroy the foundations on which they depend. And finally, we do not have enough time to rebuild institutions and economic systems before the global ecosystem spirals into chaos. Instead, we must leverage the market's potential to deliver change quickly and at scale by redesigning business incentives and penalties. This will require a critical mass of businesses to push for government action and a corporate mindset shift to view sustainability as a matter of competitiveness, not responsibility. We need proactive business support for a redesign of markets. The article continues from there, but what does that make you think of? I mean, I'll tell you what rings in my head is green metal, right? And once again, this idea of green metal is lurking in the background, waiting to really take form here. And I think, to Lindsay Hooper's point, who wrote this opinion piece, there is a conflict with green metal between sustainability and profitability. Let me read the last paragraph here. ESG as we know it is over. In the decade ahead, businesses must compete not just for market share, but for the future itself. The rewards will be significant: long-term resilience, market leadership, and the ability to succeed in a world that has the necessary environmental and social foundations. So, interesting piece. Of course, as I mentioned to Henry later in the show, ESG verged on an obsession in the mining industry. I would argue the focus of conversation for about 6 years, maybe longer, where that was the discussion. As I like to say here, the mining industry was into ESG before it was cool. As I've mentioned before, it wasn't until 2020, 2021 when we started seeing headlines on CNBC mentioning ESG. And of course, the mining industry, there's CSR before it, but I'd say as early as 2014, I would be tempted to say was discussing ESG. Now, continuing on, of course, I follow electric.co, the electric vehicle site, just to find interesting topics for us here on the podcast. And sure enough, I see these yellow trucks that look like Caterpillar trucks, but guess what? They're Volvos. And we have a headline: Volvo CE rolls out autonomous equipment at Volvo Days 2024. This is by Joe Barris at electric.co. And just a couple of sentences: a global shortage of qualified operators is impacting job sites everywhere, precisely at a time when demand for housing, mineral mining, and renewable energy construction is going from peak to peak. That's why companies from Caterpillar to Tesla to Einride are pushing to advance autonomy the way they are. And like they've done with semi-truck electrification, Volvo Group's vision for the future has them firmly in a leadership role as the construction industry automates. Very interesting story. And another one from Electric on a slightly different theme here. BYD prepares to unleash its second 7,000 car carrier to fuel its global EV expansion. And I thought this was a very interesting story in that it shows how complete China's attempt is here at controlling their supply chain to the point where they are building special boats to export BYD cars around the world. They have their own carrier, and there it is, their name, BYD, on the front of this thing. Like, have you ever heard of a GM car carrier? Maybe they have them. I've never heard of it or seen it. Have you seen a Ford ship that can carry 7,000 Fords? It just goes to show how obsessive China is on controlling all aspects of the supply chain. BYD is going to have their own carriers, their own massive boats to export their global EV expansion. Just fascinating. That's by Peter Johnson at Electric. And just one line from the article: BYD's new vessel is the second of 7 that will hit the seas over the next 2 years as China's EV leader goes global. BYD's shipbuilder, Guangzhou Shipyard International, unveiled the new car carrier at an undocking ceremony over the weekend. And finally, we have another story from the Financial Times. Western nations join forces to break China's grip on critical minerals. Coalition of 14 governments announces financing network for projects to provide raw materials required by tech industry. We saw it with Microsoft, right? As tech gets bigger and bigger, the importance of these minerals is really coming to the fore. And again, I find it fascinating here how it's the tech industry that is really requiring this economic infrastructure. Let's take a look at the story. This is by Jamie Smith and Mark McCormick in Houston and Harry Dempsey in London. Western nations are directing their development, finance, and export credit agencies to work with private industry to support critical minerals projects in a drive to break China's chokehold over a sector that is essential for high-tech industries. The Mineral Security Partnership, a coalition of 14 nations and the European Commission, will unveil a new financing network at an event in New York on Monday as they try to ramp up international collaboration and pledge financial support for a huge nickel project in Tanzania, backed by mining company BHP. A joint statement due to be published on the margins of the UN General Assembly says the network will, quote, strengthen cooperation and promote information exchange and co-financing, end quote. It lists 10 critical minerals projects that have already attracted support from MSP partner governments. Representatives of BlackRock, Goldman Sachs Group, Citigroup, Rio Tinto, and Anglo American are scheduled to attend the meeting amid a push to attract private investors and miners to invest further in the sector. Jose Fernandez, U.S. Undersecretary of State for Economic Growth, said a further 30 critical minerals mining projects are being evaluated by the MSP as Western governments race to secure the raw materials needed to make everything from electric vehicles to advanced weapons. And here's a quote from Fernandez. Quote, what China is doing is following the playbook of the monopolists to drive out competition, end quote, said Fernandez, who accused Beijing of engaging in, quote, overproduction and predatory pricing, end quote, to retain its grip on global supply of critical minerals. I tell you, when I saw the word playbook there, I was almost wondering to myself if Jose Fernandez listens to this show. Quote, we realize we can't solve this problem with any one single country. We are stronger together, end quote, he said in an interview. So fascinating developments here. Again, natural resources is geopolitics. It's always been true, but now it's becoming much more clear than it was for the last 30 years. So a wonderful show ahead for you. Henry Lazenby, Western editor of the Northern Miner, and several very interesting news stories, as you're going to see here, where, again, it seems like geopolitics and natural resources are simply extensions of the same discipline. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner, and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including SoundCloud, Apple Podcasts, and Spotify. And with that, let's turn to the news. And turning to the website, Rio Tinto chairman warns mining deals won't solve supply crisis. This is Bloomberg News via mining.com. The world needs more mines to cope with rising demand for key energy transition metals like copper, as mergers and acquisitions will not plug a looming supply gap, Rio Tinto Group Chairman Dominic Barton said. Quote, as an industry, we're not going to inorganic our way out of this challenge, end quote, Barton said in a Bloomberg TV interview, referring to growth through deals, something we've commented on here in this program. Quote, it's huge, and it's in at least 5 different commodity areas, end quote. And when Barton was saying it's huge, he was referring to the challenge. Global mining M&A has ramped up over recent months as healthy cash flows and the outlook for key green energy metals encourage the rapid addition of extra production. BHP Group has been among the most active, swooping on Filo Corporation after the world's biggest miner's $49 billion bid for Anglo American was rebuffed. Rio, however, has been quiet in the deal-making space, instead allocating hundreds of millions into exploration with a focus on copper and lithium. Still, Barton said the company was, quote, looking at opportunities, end quote. He continued, quote, we're just going to have to build more. We're going to need to mine, discover, and mine more copper in the next 30 years, end quote. You know, that's the first bullish sign I've seen for the explorers, what feels like in years, that Rio Tinto is investing hundreds of millions of dollars into exploration, with a focus on copper and, interestingly, lithium. I was watching the David Lynn report. They had a head of a lithium company on, and that CEO felt like the lithium market had bottomed. Not a crazy thought, with it bouncing on the low $10 level. Not financial advice, of course, but it does kind of feel that way from purely a subjective point of view here. Continuing on, Canada to invest $42 million in Yukon, northern British Columbia mining infrastructure. This is by a staff writer at mining.com, aiming to position itself as a first-class producer of critical minerals during the energy transition. Canada is making a further investment of up to $42 million US towards 2 priority regions in the north, the Yukon Territory and British Columbia's Golden Triangle. I mean, 2 areas we've really focused on this summer. isn't it? Yukon with Victoria Gold and Tudor Gold CEO Ken Conkin. Interestingly, so we are on the pulse over here at the Northern Miner. Let's continue. The investment was announced last week by Jonathan Wilkinson, Minister of Energy and Natural Resources, alongside BC's Minister of Energy, Mines and Low Carbon Innovation, Josie Osborne, and Yukon Premier Ranj Pillai. The $60 million Canadian in funding, subject to final due diligence by Natural Resources Canada, or NRCan, will be divided into two key infrastructure projects for critical minerals mining, one in each region. And finally, what are they going to build here? Approximately $20 million Canadian will fund the construction of a 43-kilometer access road linking the proposed Galore Creek copper mine located in Tahltan Territory in northern BC. The deposits at Galore Creek are estimated to contain over 12 billion pounds of copper, which would significantly increase Canada's annual copper supply once in production. The mine is being developed under a 50-50 joint venture between Newmont and Teck Resources. The other $40 million Canadian will be used by the Yukon government to undertake pre-feasibility activities to advance a 765-kilometer high-voltage transmission line network that would connect the Yukon electric grid to the North American grid in BC. Amazing. That sounds like a massive deal for the people in Yukon. The story continues. The transmission line, says NRCan, could support projects producing critical minerals such as cobalt, copper, molybdenum, nickel, platinum group metals, tungsten, and zinc. And finally, these infrastructure projects, combined with the recently announced Northwest BC Highway Corridor Improvements Project, are key to facilitating critical minerals development in the Golden Triangle, which holds approximately 75% of Canada's known copper reserves, and Yukon, NRCan said. And just a quote from Minister of Energy and Natural Resources Jonathan Wilkinson, who said in a press release, quote, "Developments like these help mines get built faster, and they are a key element in seizing the generational opportunity before us. These investments are needed to support critical minerals development in the region, improve community access and safety, and create good mining jobs across British Columbia and the Yukon." End quote. You know, it is interesting. As this economic infrastructure is built out, the benefits that are coming to, say, people in the Yukon, just as you see, say, with the Libido corridor in Africa, with the railway going from Zambia to Angola, or conversely, even the Chinese railway that is going from Central Africa to Tanzania. Quite interesting to see how economic imperatives are helping build out what might have taken decades of lobbying from the communities who might just want better power and infrastructure. Let's continue here. Another big story, Saskatchewan processing plant first to produce rare earth metals in North America. This is by a staff writer at mining.com. The Saskatchewan Research Council, SRC, announced Wednesday that its rare earth processing facility in Saskatoon, my hometown, produced rare earth metals at a commercial scale this summer, ahead of schedule, making the Canadian province the first and only jurisdiction to do so in North America. In July, SRC finalized tolling agreements with several international clients to convert individual rare earth oxides into metals, using metal smelting at the facility. Since 2020, SRC's rare earth processing facility has received $71 million Canadian in funding from the Government of Saskatchewan, as well as $30 million in combined funding from the Government of Canada. The funding was instrumental in helping construct a vertically and laterally designed, quote, minerals to metals, end quote, facility equipped with state-of-the-art proprietary technology, SRC said. Finally, using in-house developed technology in metal smelting, SRC's facility is ready to produce 10 tons of neodymium, praseodymium metals per month, with purities greater than 99.5% and conversions greater than 98%, the council said. And here's a quote from Saskatchewan Premier Scott Moe, who said in a media statement, quote, "Saskatchewan is the first and only jurisdiction in North America to produce these rare earth metals, further establishing a rare earth technological hub here in the province. This represents a significant opportunity for Saskatchewan to be a world leader in the area of critical mineral development by establishing a secure and sustainable rare earth supply chain." End quote. You know, as I like to say here, sometimes it all just feels like one big story, and we're getting different facets or angles on that story. Here's another one. U.S. backs Australian lithium rare earths projects for up to $786 million. This is Reuters via mining.com. The United States has backed an Australian lithium and rare earths project with up to $786 million in debt funding as Western countries seek to build supply chains for critical minerals. Australia's, adding editorially here, very smartly titled company, American Rare Earths, said on Tuesday it had received a letter of interest for a debt funding package of up to $456 million from the Export-Import Bank of the United States to support construction of the Cowboy State Mine area at its Halleck Creek project in Wyoming. And here's a quote from Melissa Sanderson, a member of the company's board of directors, quote, "We are hopeful that it will serve as an anchor to help attract private funding into the project," end quote. The bank has also offered $330 million to finance the construction of Anson Resources' lithium production plant in the Paradox Basin, Utah, the Australian company said on Tuesday. Earlier this year, the bank backed two Australian-listed rare earths projects by Australian Strategic Materials and Meteoric Resources with up to $850 million of funding. So, again, the statement by William Sheriff on the West lacking foresight, but once it figures out what it needs to do, it can act very fast. And I think that's what we're seeing here. Those very wise words, in my opinion, of William Sheriff echo here many times when I look at these stories. And here's another one. U.S. to award $3 billion to 25 projects for battery manufacturing sector. This is Reuters via mining.com. The U.S. Energy Department said Friday it plans to award $3 billion to 25 battery manufacturing sector projects in 14 states as the Biden administration works to shift the supply chain away from China. The projects will increase domestic production of advanced batteries and battery materials and follows the adoption of U.S. EV tax credit rules to shift battery production and critical minerals away from China. The awards fund battery-grade processed critical minerals, components, battery manufacturing, and recycling, and will generate $16 billion in total investment for the projects and support 12,000 production and construction jobs, the department said. And here's a quote from White House climate advisor Ali Zaidi. Quote, "Mineral security is essential for climate security. This sets up to lead on the next generation of battery technologies from solid state to other new chemistries," end quote. You could argue mineral security is national security, mineral security is economic security, and we could probably think of other examples. It is also, according to Ali Zaidi, climate security. And then they list off a whole bunch of projects that are getting $67 million, $100 million, $225 million, $145 million, $166 million, $166.1 million, $200 million, $150 million. So the money is flowing into the minerals sector. And here, my friends, is another headline. Germany launches raw materials fund to strengthen supply chains. Bloomberg News via mining.com. I mean, we're going from a dearth of capital to, are we going to have so-called overcapacity here soon? But, if this is what has to be done, it's what has to be done. Let's look at the story. The German government is launching a $1.1 billion fund for investment in raw materials as it seeks to limit dependency on producers such as China for critical minerals. Quote, "Good news. The raw materials fund is coming," end quote, Franziska Brantner, a deputy economy minister, said Wednesday in a post on X. Brantner added, quote, "In a time of growing geopolitical uncertainty, it is crucial for Germany to strengthen its resilience in supply chains for critical raw materials." Brantner is a member of the Greens, interestingly, a junior partner in Chancellor Olaf Scholz's ruling coalition. So it's amazing how things change. I mean, I think 20 years ago, for you to see a Green politician in Germany advocating the development of mineral extraction would have probably turned some heads. Brantner continued, quote, "With the fund, we are investing in equity for projects both at home and abroad, from mining to processing and recycling. In doing so, we are finally taking an urgently needed step that other countries have already successfully embarked on." So fascinating. There, another headline, Saudi Arabia targets control of Alba to bolster metal ambitions. This is Bloomberg News via mining.com. Saudi Arabia aims to gain control of Bahrain's aluminum smelter, furthering its plans for mining and metals to become a third pillar of the kingdom's economy. State-controlled Saudi Arabia mining company known as Ma'aden announced a series of deals this week involving Aluminum Bahrain, or ALBA, When those deals close, the Saudi company, quote, hopes to be a majority shareholder in Alba, end quote, Madden Chief Executive Officer Bob Wilt said in an interview in Riyadh. Saudi Arabia's de facto ruler, Crown Prince Mohammed bin Salman, has put metals at the center of his Vision 2030, with Madden tasked with growing the domestic industry. Madden is targeting Alba as part of a bet that aluminum will prove crucial to both energy transition and the oil-rich kingdom's plan to diversify its economy. Quote, I'm very bullish on aluminum, end quote, Wilt said. Quote, the energy transition doesn't happen without aluminum, so if we want to be a critical minerals and processing hub, we've got to control the feedstock, end quote. Very fascinating article. Read the whole thing on mining.com. Another headline, White House says review of Nippon Steel's proposed purchase of U.S. Steel is ongoing. This is Reuters via mining.com. And it says that the White House knows nothing of a delay or extension in the proposed purchase of U.S. Steel. Continuing on, China pushes back on U.S. probe of uranium exports. This is Reuters via mining.com. The Chinese government on Wednesday pushed back on a U.S. probe of whether China is helping its neighbor Russia dodge a U.S. ban on Russian uranium imports, saying Beijing has always opposed, quote, illegal unilateral sanctions, end quote. Reuters reported exclusively on Tuesday that the U.S. Department of Energy and other relevant agencies are closely tracking the imports from China to, quote, ensure the proper implementation, end quote, of the ban on Russian-enriched uranium that President Joe Biden signed in May. The U.S. is concerned that China is importing and using Russia's uranium in its own power plants and then exporting domestically produced uranium to the United States, effectively undermining the U.S. ban that is intended to deprive Moscow of revenue for its invasion of Ukraine. The Chinese Foreign Ministry said, quote, the cooperation between China and Russia is an independent choice made by two sovereign countries based on their respective development needs, openly and honestly, without targeting any third party, and without being interfered or obstructed by any third party, end quote. It said China is willing to continue, quote, normal economic and trade cooperation, end quote, with countries around the world, including Russia. Very interesting story there. And another story, Zijin vows to keep investing in Canadian mining despite crackdown. It's Bloomberg News via mining.com. And just an excerpt here, the Chinese gold and copper producer will, quote, absolutely, end quote, continue to seek out investments in Canadian mining companies, especially junior exploration firms. Zijin Vice President Shaiyong Shen said in a Tuesday interview at Denver Gold Group's annual conference in Colorado. Shen continued, quote, Canada has some of the best mineral exploration companies in the world. As world leaders, I believe it's in our best interest to work together, end quote. And another headline, Ivanhoe Electric Unit secures $55 million Chinese investment for vanadium battery business. That's by a staff writer at mining.com. Another headline, gold-rich Sudan talks mining with Russia as war alliances shift. That's Bloomberg News via mining.com. And Sudan, of course, is enduring, as it says here, a 17-month civil war. And let's just read a little excerpt here. Gold-rich Sudan discussed boosting cooperation in the mining sector with Russia as Moscow strengthens ties with the North African nation's military-led government amid a 17-month civil war. A meeting between Sudanese mining officials and Russia's ambassador and representatives of its Chamber of Commerce in the Red Sea city of Port Sudan touched on ways to expand investment opportunities, Sudan's Minerals Ministry said in a statement. The encounter is the latest sign of Russia's deepening relations with Sudan's army, which is battling the rival Rapid Support Forces paramilitary group in a conflict the U.S. estimates may have killed as many as 150,000 people. A Sudanese army official in May suggested his side might get weapons in exchange for letting the Kremlin establish a logistical support center on its coast, although no formal deal has been signed. Another headline, BHP and Cobre to jointly explore for copper in Botswana. That's by Cecilia Jamasmi at mining.com. Another headline, Trafigura to announce Richard Holtum as new CEO as soon as next week. That's Reuters via mining.com. And that was reported by the Financial Times. And just an excerpt, Holtum, a former British military officer, has seen a rapid rise at Trafigura since he joined from Glencore in 2014. He currently runs Trafigura's gas power and renewables division. Very interesting. And final headline, Uranium Energy to buy Rio Tinto's Wyoming assets for $175 million, is Cecilia Jamasmi at mining.com. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 3.77%. That is 0.16% higher than last week. The UK 10-year gilt is yielding 3.96%. That is 0.22% higher than last week. And the Italy 10-year bond is yielding 3.52%. That is up 0.07% from last week. So yields rising. Turning to precious metals, gold is trading at $2,653.70 per ounce. That is $47 higher than last week. Silver is trading at $31.20 per ounce. That is 10 cents higher than last week. Platinum is trading at $959.30 per ounce. That is $26 lower than last week. And palladium is also lower at $1,030.50 per ounce. That is $35 lower than last week. Turning to industrial metals, copper is trading at $4.30 per pound. That is 9 cents higher than last week, continuing to climb from the $4 mark. Iron ore is trading at $91.93 per metric ton. That is down 33 cents from last week. Aluminum is trading at $1.13 per pound. That is a penny lower than last week. Lead is higher at 93 cents per pound. That is 4 cents higher than last week. Nickel is also higher at $7.51 per pound. That is 11 cents higher than last week. Tin edges slightly higher at $14.44 per pound. That is a penny higher than last week. Cobalt is unchanged at $11.02 per pound. Lithium is slightly higher at $10.28 per kilogram. That is 6 cents higher than last week. Uranium is slightly lower at $79.45 per pound. That is 20 cents lower than last week. And zinc edges lower at $1.31 per pound. So zooming out, gold is really the star performer here, with silver edging a little higher, platinum, palladium edging lower, and the industrial metals chopping sideways with, copper maybe the standout there, up 9 cents on the week, but frankly, nothing to write home about, and many metals almost not changing at all. Perhaps consolidating gains which seem to have come from the Fed rate cut, and those are your metal prices. Coming up, I'm very pleased to welcome back to the show Henry Lazenby, Western editor at the Northern Miner. He discusses his visit to two precious metals conferences, the 2024 Precious Metals Summit at Beaver Creek, which occurred from September 10th to 13th, and the Denver Gold Forum, also known as Gold Forum Americas 2024, at Colorado Springs from September 15th to 18th. It is a super interesting interview on what Henry is hearing at these conferences, and quite fascinating with the emphasis on management and even the counter-cyclical moves by companies such as Newmont. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Henry Lazenby, Western editor at the Northern Miner. Henry, welcome to the show.
Hi, Adrian. Thanks for having me. It's always a pleasure.
It's an absolute pleasure always to talk to you, and there are a lot of people who listen to the show who are always excited to hear what you have to say. I get comments. I have Henry back on. So the pleasure is mine, Henry, and a lot of people will be excited to hear what you have to say. Now, you've been to a couple of the major precious metals conferences that have occurred this month. In September, there's the 2024 Precious Metals Summit in Beaver Creek, which was September 10th to 13th. And there was also Gold Forum Americas 2024, also known as the Denver Gold Forum. That was September 15th to 18th in Colorado Springs. So tell us, big picture, what were your thoughts? Gold's at $2,654. I guess the mood was good.
Yes, you hit the nail on the head. The golden thread through both conferences really was the popping gold price. It really created a lot of excitement in the latter half of the Beaver Creek conference, where gold started to run, and then we heard the air horn in the halls there when gold finally reached a new record. Little did we know that there's more excitement to come. So everybody was really excited about it, and it just drove home that urgency amongst the management crowd there. to really present with a little bit more urgency and get that message of invest in us. We've got the goods a little bit more urgently to the investors.
Now, each conference kind of has its own characteristics, right? And not everybody might be familiar with these conferences. So what is the difference in terms of the overall setup and theme and orientation, we might say, for each conference? Like maybe start with Beaver Creek if you can, the Precious Metals Summit in Beaver Creek, and then the Denver Gold Forum. Like, how are they different? How are they the same? What's the difference?
Look, both conferences set out to connect the investors with companies who require capital to invest in their assets and to produce metals that our new economy needs. So the Beaver Creek conference is more geared towards the juniors, the explorers, and the developers, just pre-production, and perhaps those even looking for more capital while they are ramping up production to achieve steady state economics at their assets. And then the Denver Gold Forum conference, which actually took place in Colorado Springs this year, is more geared to the majors and the producers. And there were quite a number of gold companies there, as well as some base metals companies. Everybody is looking to pick up copper assets in connection with the gold. They usually occur together. And then, of course, nickel and lithium was also in good representation there. And then as well, uranium is still making the rounds. It seems like there's a new wave of companies consolidating and starting exploration in all the known hotspots, especially in the Athabasca Basin. There's several projects making some new discoveries and or progress in the established eastern part of the Athabasca Basin, there in northern Saskatchewan, and then also some companies consolidating and making progress with development and expanding resources on the newer southwestern portion of the Athabasca Basin. It's some exciting stuff happening there.
Very interesting. So I guess the first surprise, at least for me, is these conferences aren't simply oriented towards precious metals, despite the names.
Yes, absolutely. Even at Beaver Creek, we had a good selection of copper companies. Pure play silver companies seem to still be a very rare breed and in high demand. Some of the stories there certainly have me excited. I like the America's Gold and Silver story, as well as the Vizsla Silver, always exciting. And then, of course, some of the nickel plays there, Power Nickel and FPX Nickel here in British Columbia. Some of the premier development projects here in Canada with the added capacity of potentially sequestering carbon emissions in tailings down the line.
So you had a few stories here, quite comprehensive coverage on the Northern Miner of what was taking place at Beaver Creek. So what were people saying? So the sentiment was good. Okay, check. What were people saying? What kinds of topics? Obviously, they had, analysts or investment advisors of a certain kind. What were people saying?
Right. So one of the most interesting stories that I wrote actually came from one of the first keynotes presented there at the Beaver Creek conference by Stephen Enders. And he is the executive chairman of the Denver-based recruiting firm Brooks & Nelson, LLC. And he works a lot with recruitment of C-level candidates for mining companies. And so he had a few interesting points to make. First of all, is to drive home the fact that, you can have great assets or even mediocre assets, but really the key in making a project work is the management. It's the people around an asset, and it's not the rocks that make or break a project. Obviously, if you've got great rocks, it makes it easier. But it's just a basic kind of starting point to actually elaborate on into other points which he made, such as, quite ironically, a lot of focus is being placed by the industry on attracting and or retaining the correct talent. And it's a recurring theme, management, the skills gap, how to retain talent. But surprisingly, a recent survey they conducted found that more or less 90% of the surveyed companies, 42 were surveyed, said that while they agree management is key to a project success, about 90% of them don't do due diligence before appointing a manager to that level. So that speaks to some egregious gaps in the skill set. So Enders was going on about the successful candidate should have a track record that has proven relevant to the task at hand. He must have worked with similar deposits in the past, similar geology, similar challenges, similar jurisdictions, similar permitting issues, capital issues, that makes their experience relevant to the task at hand. And it seems like a very obvious point, but he says a lot of companies don't really know that blind spot. And then, of course, some other panel members there later in the day. Michael Gray, partner and co-founder at Agentus Capital Mining Partners, was also just reiterating that good managers make rocks work. It is really imperative on junior companies to demonstrate a strong project pipeline and capable leadership to guide the project to the next stage. That was just really all about management and how important it is. Of course, then the gold bulls, the gold bugs were there in force. We heard early on from Florian Grumes. He's the CEO of the Midas Touch Consulting, and he also writes a newsletter. He expects gold to hit $3,000 soon. We also heard from Ronald Peter Stufferle of Incrementum AG out of Liechtenstein. He is adamant gold might see a price around just below $5,000 soon, given all the macro pointers that he is seeing, and we can touch on those in a minute. He also warned that he does see gold maybe pulling back a little bit, and he's not worried about it. If it goes back to about, say, 2,300, even 2,200, he would reckon that's a healthy consolidation point. So don't be alarmed when you see gold perhaps easing off a little bit. But so far, so good. I mean, the high price level is being maintained. Then just to talk about these macro factors, and this is, of course, a trend that was discussed at length at the Denver Gold Forum, is the rising gold price. It's going to translate into massive free cash flows for the majors, for any producer almost. And that is also dovetailing, depending on who you talk to. Some analysts see moderating inflation at the moment. The input costs and cost creep is at least moderating. We wouldn't say going down, but that also then points to room for an expanding profit margin. And so my big question to all the CEOs I interacted with at the Colorado Springs conference was, how would they ostensibly prevent the sins of the past from being perpetrated again? If you recall, around 2011, there was an extended gold price surge again in the aftermath of the great financial crisis of 2007, 2008. You know, some of these sins of the past were reckless spending, overpaying for poor assets, generally poor mergers and acquisitions decisions. At that time, many of the majors were convinced that it is imperative to grow the volume of production by all means, instead of the quality of production, which would focus on managing those costs to not creep over a certain level that you're feeling comfortable with. I asked Barrick Gold CEO Mark Bristow what he sees this reserve price level at the moment and what he feels comfortable with at the moment. And if you recall again, Mark Bristow is famous for running Rand Gold Resources back in Africa before the merger in 2018 with Barrick. And he has for many years been adamantly saying that for Rand Gold, the reserve price was $1,000. And even though the price were trending around 1,500 and higher, or 2,500 higher, he stuck to his guns. And while in control at Barrick, he has now lifted that to around 1,300. He said he might see it settling at around 1,400 for a reserve price, but that's basically where he's at. And that speaks to Barrick's tier one asset portfolio, really the best of the best. So yeah, those are some themes that came through. Just the gold price, the macroeconomic drivers. The other portion that I probably haven't mentioned is, many analysts have spoken at length about it, is the continued central bank gold buying. China, Russia, some other Eastern economies. Ronald Stufferle was saying there's a distinct shift in the marginal gold investor, the buyer, has shifted from the west to the east. There's more expendable income available in the east now, where people want to save the money. And of course, the message is dawning on them that gold remains the ultimate store of value. And that's really one of the ultimate messages that permeated both conferences, is gold is the ultimate store of value. And if you believe any of the gold bugs, the global economic order is due for collapse any given month.
Hilarious. I can hear it now. So, okay, so quick question. I feel like I should know this reserve price, but what did Mark Bristow mean by reserve price of
Mm.
1,000? Is that all-in sustaining costs of like 1,000 to 1,500, or that's what he thinks the gold price should be?
It's a price assumption they'll use to calculate how much reserves and resources they actually have within their assets. So that can
I
vary.
see.
And for instance, if you have a given asset, it's got a given tonnage of material and there's a given grade in that. Obviously, if the gold price increases, you can afford to maybe lower the cutoff grade, which means you can include a little bit more of the lower grade material, which gives you a bigger volume of ultimate ounces produced, because those lower grade that would previously not have been economical is now economical. So companies in the past, in 2011, they all rushed to really move these reserve prices up, perhaps out of a reasonable pace with the rise in the gold price. And then gold corrected quite sharply around 2014, 15. And many of these majors were forced to write down millions of ounces from their books again. The reserve price didn't support that anymore.
Okay, got it. So, in a sense, this is the price that, say, the company is working into their projections. So, all to say, in Bristow's case, he's being quite conservative, we might say, in his
Exactly.
projections of, what things are worth. So that, in other words, he's not getting carried away with the gold price and is going to slowly move rather than, okay, we're at $2,500 gold, so we'll assume 2,000, right? And this sort of thing.
Exactly. But so just when you listen to some of these developers sharing their development plans, sharing economic studies of their assets, you will quickly realize that some of the prices they're basing their economic cases on are already pegged at like 2,200 US dollars per ounce or 23 even. And which is actually quite outrageous, to be honest. It's really marginal assets now being repackaged, and managements are seeing whether they can maybe get a go at this asset in this cycle. But clearly those are assets that somebody like Barrick would have acquired donkey years ago. It really was that kind of potential that makes most sense.
I mean, it kind of harkens back to our earlier discussion on management, doesn't it? And here it shows a veteran like
Exactly.
Mark Bristow, the conservatism in his approach, and perhaps the junior with a couple of people that doesn't have much experience is running away with the $2,200 gold price. So just kind of interesting.
I can add some
Very
other
interesting.
tidbit to that. For instance, I was
Sure.
listening just to the tail end of a Newmont presentation there. Unfortunately, I pinned them down for an interview myself. But one of the executives, the COO, Marna Klute, was saying Newmont's approach at this stage is they are divesting non-core assets and they are looking to crystallize billions of dollars of non-core asset value for shareholders as it stands. So they are not in an acquisition mode at the moment. They are still kind of paring down their core portfolio after all their acquisitions of recent quarters. So that's just a different kind of mode, I believe they are in. That doesn't speak to whether they are being conservative or what they're doing in terms of prudence. It's just they're a little bit in a different mode at the moment, paring down, right sizing, and focusing in on only keeping the best quality gold assets and copper assets that they want to move forward with.
That is absolutely fascinating. And of course, like last I checked, Newmont is the biggest and the biggest
Mm.
company by market cap. And here they are almost pulling a contrarian move here,
That's
like
correct.
selling
Yeah.
stuff off. Right. I mean, how
But
interesting
again,
is that? I mean, yeah,
yeah,
go
but
ahead.
again, I think it speaks to prudent management because they are disciplined enough to realize that, okay, even though a company of our size and prowess could essentially move any asset into production successfully, they are prudent in saying, listen, let's focus in on our real super core, highest profit, highest margin growth projects, while we let other companies have a go at some of these more marginal or non-core non-strategic assets for us. So there's a lot of assets still up for grabs and deals being written and worked out right now. So I think up to about the end of the first quarter, maybe the first half of next year, we can expect some news from Newmont as to further asset divestitures.
Okay, and just to clarify, when you saw Newmont and maybe talked to Mark Bristow, this was at the Denver event.
Correct.
So what was the discussion around gold equities?
Right. So at the Beaver Creek conference, what it comes down to with equities, there's more like a complaint from most of the companies I interacted with is that they're always undervalued, right? They don't attract the same net asset value multiples that the producers get valued by investors. And then also nobody in the mining industry gets valued at the multiples the other industries such as tech or even medical or etc. gets valued at. And so some were saying at the Beaver Creek, like John Hathaway, like Sturferle, and other analysts, that while the gold price will certainly lift the tide for most boats, it really becomes incumbent on the investor to discern which companies are going to go further, in the current context, which companies has the correct manager and management teams in place, which companies have the capital available, which companies have permitting window or a pathway towards permitting in place. It's an incredibly important question these days. And so those all affect the valuations that investors will give to these issuers. The situation becomes a little bit better when you look at the majors, the producers, although the same complaint, they are undervalued compared to other industries. Again, the theme came that the record prices will lift most boats, but it becomes the investor's job to find the better stories. And that's really, again, comes back to management, execution ability of the project plan and getting that project into development. They mentioned that the lower inflation these days, the rate cut will improve access to capital. So generally, the table seems decked for the equities to start performing better now. But that's a big what if and a big if they do the management question, the planning question, the permitting question, the capital question, the ESG question, all these things right. And so there are so many moving parts and risks to manage. It's kind of understandable why the mining industry is not really attractive to investors at large at the moment, but maybe things can change. I think the biggest takeaway for me from the Denver Forum was that there's a distinct optimism. There's much less drama in the industry at this stage when it comes to regulatory upsets, etc., just as things stand right now, and discounting the macro geopolitical discourse happening. People are very optimistic that perhaps this cycle around, the equities can have a go at better valuations and more in line with what they deserve than what they're achieving.
Very interesting. And in terms of favored jurisdictions, was there any discussion? We see Friedland and Sean Rusin developing in the US. We see Argentina making a bit of a comeback to a certain degree, at least in terms of the mining sector. Was there any discussion around exciting places to build right now?
I think you've actually named them. There were some interesting discussions regarding Argentina, like, for instance, Frank Giustra. He grew up there as a child, and so he has some perspectives. He said, it almost seems every time there's a political change that the country is set for the correct kind of economic policies and changes that need to happen. Open the economy up for foreign investment. And then the moment, that euphoria passes, it seems like it's almost back to the same old business as usual. So Argentina, there certainly is some excitement there with McEwen Copper and the Los Azules project there. Rob McEwen was present at both conferences, and he did present. He again laid out his utopian vision of the mine of the future there at Los Azules, and he even mentions building a 5-star tourism-focused hotel there and activity center as part of the mine development, which is really out-of-the-box thinking.
Indeed, it is. I never thought of the 5-star resort as a part of the mine plan.
Yeah. And then the other jurisdiction I thought was quite notable for being mentioned quite often was Nunavut in Canada. One of the emerging territories of northern Canada. There is American West and Aston Bay Holdings making some copper discoveries there at the Storm project. I see just today they have another news release out reporting some really high-grade copper intercepts there. I'm quite excited about that story. Also, Quebec continues to emerge as a preferred top-tier jurisdiction. There's so much money going in there in the gold, the copper, the nickel. I see today Azimuth Exploration there made a discovery of nickel in the James Bay Low Labs. Of course, there's the lithium discoveries happening there with Corvette, with the Patriot battery metals, etc. Lots of really positive investment and stories coming out of Quebec. So we're really bullish on it. Canada as a whole, a lot of frustrations emerging about permitting, certainty of investment, certainty of tenure. First Nations reconciliation remains a big top of mind issue for investors. But still, it's a top tier jurisdiction, but there are some questions. The US, of course, very attractive at the moment with all the government policies, the Inflation Reduction Act, other acts, the Department of Energy, the Department of Defense, making grants and funds available for development stage projects in lithium, in other critical minerals as well. Even in the copper space in Arizona, we're seeing some funds flowing. So really exciting jurisdiction to work in. Also, again, permitting remains a big question in the US. Really depends on what kind of lands you have and what the metal or mineral is that you plan to produce. Of course, must say Australia is a standout jurisdiction, lots of money sloshing around there at the moment, and they are outwardly focused. The companies there looking at Canada, looking at the US, looking at South America, even Africa. And of course, Europe is increasingly emerging here and there. I've interacted with some companies, Mawson, Finland, and I listened to some presentations there in the region as well. Several gold companies making waves there. So here and there, some jurisdictions that get more mention than others.
Okay, excellent. And as we start to wrap up here, just kind of curious on ESG. I mean, from, I would say 2016 to 2022, it was almost all that anybody seemed to be talking about.
Yes.
Other than the gold bugs once in a while,
Yes.
like with, but other than that, like, I mean, ESG was nonstop for 6 years. Like, there's just an article, I think it was out today in the FT on how ESG is dead, long live ESG. Like, was it discussed much, or was it sort of like we've kind of beat that topic to death and there's just not much more to say on it? Like, was there any discussion of ESG and anything around that at either of these conferences?
Yeah, I'm very happy that you mentioned this. That is actually one of the standout points as well. At the Beaver Creek conference, you would hear ESG being mentioned as part of presentations. It's, of course, included as part of the corporate presentation deck of almost every company. But less was said about it. And then distinctively at the Denver Gold Forum in Colorado Springs, the point was made that nobody was talking about it. We didn't hear anybody really addressing ESG concerns or plans or projects in any length at the Denver Gold Forum. And people were actually wondering, was it the topic du jour over the past several years? Has it now kind of worked its way, had its way with the industry? I will share some, let's say, flippant comments from analysts. One analyst on one side of the spectrum saying ESG is nothing other than virtue signaling, corporate virtue signaling. And I have another producer that complained that they have achieved ESG compliance on every metric that they were asked to, and it added a massive layer of complexity and cost to their operations, and they didn't see any difference in the bottom line. And so I think from my perspective, the realization is dawning that, ESG makes good business sense because it's actually boils down to good business management when you do things in an environmental, governance, social, responsible manner. It's part of better business practices. Even though it gets less mentioned these days, I think it's a little bit baked into every company's story at the moment. That being said, it was distinctly mentioned that fewer companies mentioned this. And as I've mentioned, there are some distinct criticisms emerging, not to even the least speak about all the differentiating metrics by which companies are being gauged on ESG benchmarks. There's no one particular global standard developed yet, but several. And so there's a lot of work still to be done to unify those codes and really make it a standard for the industry to adopt and by which it can be judged by.
That is super interesting. I mean, it almost brings us back to the management issue. It's almost perhaps now after, 8-10 years of discussing this, it's just kind of baked into the cake, so to speak,
Exactly.
in good management.
Yes.
We don't need, it's sort of like, with any other part of your business, almost like we're discussing reserve prices there. Okay, excellent, Henry. This has been fascinating. Any final thoughts on attending both these shows that you'd like to mention?
Yeah, like somebody said, there's much less drama in the industry. Last year, I think the Beaver Creek conference, a lot of the people were concerned about the new impending minimum alternative tax measure that was implemented in Canada that would have impacted juniors' access to flow through shares and those kind of financial incentives the governments make available. This year, per se, except just a lot of talk about the optimism regarding soaring metals prices and generally supportive macroeconomic conditions that dovetail into the industry's trajectory at this point in a positive way. So it's for once actually nice coming away from spending time with industry executives and actually coming away with some optimism and some positivity that they are aware of the industry's image issues. And they are doing what they can to try and make the better decisions in this cycle so that hopefully we can attract investor attention en masse again in the months and quarters and years to come.
Fascinating. Henry Lazenby, Western editor at the Northern Miner. Thank you for sharing your insights and observations of these conferences on the Northern Miner podcast.
Always a pleasure, Adrian. Can't wait for the next one.
I hope you enjoyed that extended interview with Henry Lazenby, Western editor at the Northern Miner. Big thanks to Henry for another very interesting discussion. And thank you, dear listener, for joining us again. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.